Well, hello everybody. Mark here, Mark Peck here, Director of Business Development from Rocket Dollar, where we help folks unlock their retirement and invest in alternative assets. Very excited to be joining you here from my home in upstate New York. Like many of you, you're probably quarantined. I'm on day number 7 here, and just trying to find ways to understand everything that's happening. Stay safe, stay constructive with our network and our group, and continue to try to find ways to add value to our group. So excited to be joined by Bruce Roberts today, founder and CEO of Carofin. Carolina Financial Group has been helping folks invest in private assets for over 20 years. And Bruce, I just want to get your take a little bit on everything we've seen, having worked through, 87, 99 tech bubble, 9/11, and 2008, the Great Recession. Where do you think we're at this point?
Well, it's kind of mixed. I mean, this is obviously different. I recently put out a piece to a lot of the investors that we reach, and this coronavirus is kind of the ultimate boogeyman. If you think about it, it's personally threatening, about as personal as it gets, and it's invisible. And so, I tend to go to analogies a lot of times when I'm describing something. And so, to me, it feels like we're still in we're in that outer band of the hurricane that we keep hearing about as hurricane season rolls through here, where people are just getting whipsawed big time. And obviously the market is as volatile, I suspect, as it's ever been for this extent, for this period of time. So, I think we're kind of in the ride it out phase right now. I tend to be fairly sanguine for all kinds of reasons we can talk about as we look forward. But, in the immediate term, it's, look after your loved ones, get your personal situation under control. If you've got a business, you really are having to look over and try to see what kind of cash flow issues you're facing. But I guess on the bright side, there is a lot of cash in the system, and there's a lot of means for people to invest. It's a guess at this point, but my guess is that people are going to be looking at the public markets in a different way going forward, just given how volatile they are. And if there's that money is there for investment, and at least from our perspective, we're going to try to be a rallying point to formulate capital into basic business that can make sure that our companies are vital to our communities ride out this storm. And I'm talking largely about the middle market and to some degree venture.
Sure. And we've heard that story resonate with a lot of our consumer base. People are worried and anxious about what is happening with their retirement portfolio and their investment portfolios in general. And while you're stuck at home, hopefully you're fortunate enough to be able to work from home like a lot of us and still be able to contribute to your business, but you still probably have more time on your hands than you've dealt with in the recent past. And so it's a great time to do some research, do some reading. I think all of us have that sort of checklist of personal financial tasks that you mentioned that we should be working through. And so, from your perspective, let's say somebody's starting to try to do a little homework on alternatives. Where should they start? What's an approachable first step, or maybe a piece of content or concept they should start to sort of wrap their head around to start to be able to diversify and take action in that direction?
Sure. Well, let's look at the alternative market sort of in two major buckets. One would be sort of managed accounts. And managed accounts in my vernacular would be funds of different descriptions where you've got a professional fund manager, and you're essentially hiring that manager to manage that portfolio around a given theme. It could be real estate, it could be private lending, it could be any number of things. Of course, the problem there is, and probably potentially for a lot of Rocket Dollar accounts, is the minimums to get in those funds is relatively large, and so maybe that's germane, maybe it's not. The bucket that we have been active in for so long has been direct private investment. The challenge, of course, is to do it directly. You really need a knowledge that is kind of hard to gain. And so we started over 2 years ago to start writing and assembling content that shows up, as you see on the screen here in our knowledge base. And it's really not meant to be self-serving in mentioning this. It's really, I don't know of another place you can begin to start an educational process And even we, as we write these, we keep saying, wow, maybe we need to go about this subject or that subject, because it's, if you think about it, lending and all the considerations of being a private lender, then you think about equity and the considerations of making a private equity investment. So we've assembled information there. The one white paper, which I think is a great starting point, is called Private Investing the Right Way. And what we try to do is give people something they can hang on to. So the right way in our case is the right investor. So you have to look at your risk tolerance, investing the right amount, and that's looking at the overall allocation. So for a Rocket Dollar client, this would be dollars that are already allocated into this retirement account, or potentially some subset of it. And then in the right security. And we can talk about that in more depth if you'd like. But that paper really tries to break it into pieces that are pretty digestible, so that it's pretty. Once you see it written and once you read it, I hope you'll find it to be pretty clear. It's just, if you need to be in treasury bills, you should be in treasury bills. If there's a portion of it that you can take some level of loss on, then obviously you can reach into higher risk securities like direct private lending. But I guess what I would say here is, Mark, probably more than we've ever been inclined to speak to, there's the investment thesis, which, our job is to try to mitigate risk and make that as informed as can be. But there's also, we're going to get into a point here, I believe, where it becomes a bit patriotic. Yes, the government may be throwing a lot of money in a lot of directions here to try to, and they're obviously moving incredibly quickly, which means it's not particularly well thought out, which means there will be excesses. But you can pretty much, I'm real confident that a lot of companies that are good companies that can't be financed by a bank in this market, just because, banks have become basically irrelevant in terms of lending to operating companies. They don't understand at a local level how to underwrite a credit anymore. And so that creates an opportunity for private lenders to band together, hopefully with someone like ourselves who understands credit and structure and securities, and to make loans that are incredibly important to jobs and the welfare of their community.
Yeah, we couldn't agree more. And we don't mean to beat this drum to be self-serving at the end of the day. We obviously both feel strongly that we have a good tool and offering, but I think our real takeaway, and why I just wanted to bring you together today, and thanks for the time again, was just to get people thinking about this. And as they try to expand their horizon and consider, what can I do to lead myself to a more insulated and less volatile, return profile over time, and just feel a little bit more comfort, as these things progress. Considering alternatives, doing a little bit of homework, visiting the knowledge base at the Carofin site, and just beginning that journey is really just our call to action. So thanks again, Bruce. I guess I'll pose it to you here. If you have, maybe one final takeaway for the audience, just if there's something they can, start to chew on, what would it be?
Well, I guess it would be, get your head around this private investment the right way, and start to look in the mirror and think about portfolio allocation, both in the aggregate as well as for individual investments. At a local level, you might reach out to development banks and folks of that nature. We're going to be very, very active wherever we can, and we have, of course, limited resources to try to be a catalyst and a rallying point for folks who are inclined to do this. But the sort of returns you should get will be attractive in this market. You should certainly be in the double-digit rate if you're making these sort of loans. And while the bond markets may move up and down and credit spreads will widen, in all likelihood, they'll narrow again. So what you're looking for is absolute returns. Get yourself out of the volatility of the public market. And I think in particular, the credit markets offer up, private lending opportunities are just, it's a good opportunity from an investment standpoint, and goodness knows it's important to your community.
Yeah, terrific. Well, thanks for that message. We appreciate what you guys are doing. Everybody stay safe. Thank you for joining us, taking a few minutes out of your day, and feel free to check out either site and just see what we can do to help.
Okay.